Okay, so first, my name's Sudhir Joshi, and I am a client of Delphian Trading. And I should say that I'm not an employee. I'm not getting paid to do this short presentation. I'm just a retail trader that subscribes to Delphian service. And I'm a regular on the weekly call that Josh mentioned. And I decided to trade the earnings plan. It looked like a great opportunity to me. So I decided to trade it quite extensively, as you'll see, and also keep track of it pretty in a lot of detail on Excel. So that created some data that is worth sharing with people. However, I will say it's my actual results. Your any individual's trading results can vary based on the trades you select and your risk management. And so your mileage may vary depending on how you choose to trade the plan. Next slide, please. So the first thing I wanted to point out is what the market did during this trading plan. The plan kicks in about the middle of month 3, which is where we're at now, middle of December, or in the last plan's case, middle of September. And the trades are pretty well finished by the middle of month 2, which is November in this case, or will be February in the new plan. And you can see starting in the middle of September, essentially this looks like a roller coaster ride at an amusement park. It went down in the middle of September, went up and down, then now is up. And I cut and pasted this chart yesterday. So we had pretty much everything. It wasn't a straight up market. It was a straight down market. It was kind of a choppy sideways market. So I think it's a good indication of how the plan did. Also, the plan had one big event risk, which I'll talk about, which of course was the presidential election, which was very contentious, as you all know. So there was that risk that had to be factored in. And then the results on the next page are my real results with real money and real emotions at stake. So this is how it went. Go ahead, next slide. So I did this analysis yesterday, as you can see, and I categorized the trades based on direction, as the first slide that Josh showed talked about, and just in alphabetical order. The bearish trades are the bearish pre-runners and the bearish runners. You can see they were 85% successful and 53% successful, respectively. Then the bullish trades were the bullish pre-runner and the bullish runner. They were 78 and 88% successful. The movers and the non-movers, which are neutral direction trades, were 60% successful. And the vol crush and the vol rise, which are also neutral, were 80 and 56%. I did a total of 213 trades and had a win rate of 74.5%. There were 121 trades that I did not take. My profit factor, for those who don't know what profit factor is the total dollars of profit divided by the total dollars of loss. Obviously, you want that above 1, otherwise you're losing money. My profit factor was 2.19. Without a Wayfair trade, it was 2.52, which I'll talk about here in a little bit. Some of the reasons I didn't take the 121 trades is one, all of the trade entries are based on when the earnings are going to be. And in the fourth quarter, the earnings dates kept moving. Now, I would always check the earnings date before I got into a trade. And a lot of times I found out the earnings date, announcement date, had moved. And then that resulted in the trade entry date moving. And a lot of times it had moved up and I had missed the trade entry date. And so keeping track of those actual earnings dates is critical. And if I had missed the entry date, I would just pass on the trade. There were also, the plan does generate some redundant or conflicting trades. For example, there'll be a recommendation of a non-mover and a vol crush on the same stock. It's really the same trade. So there's no need to double up on it. I never doubled up. I never had two trades open on the same stock. There was a time period where the stock market was going down, and I was really nervous about the election. I didn't know, it was very contentious, and so there were some trades I just didn't take the week or 10 days before the election itself. And there were also some trades I didn't take because of my industry bias. For example, we're in the middle of the COVID crisis, and I didn't like trades on airlines, even though they were recommended. So I found out later they worked, but I decided not to take some of those. And then there were some other cases where they didn't meet my risk parameters, so I passed on those. So, but overall, like I said, if you can, I traded 75% win rate and over 2 profit factor. It was a very profitable plan for me. Next slide. So here are the things I learned actually doing the plan with real money for over the last 3.5 months. First, keeping track of the moving earnings date is key. As I mentioned, if the earnings date moves, the entry and exit date will move. And Delphian has an advancement in the platform that will highlight these changes in earnings dates, which I'm sure Josh and Sean will talk about. I think hopefully it'll be a little bit easier this time around. But on the other hand, these earnings dates moving may have been a symptom of the COVID crisis, and maybe they don't move as much going forward, which will make it easier to trade. The other thing I found out is your risk has to be the same per trade. In my case, I risked about $1,000 to $1,300 per trade. And I made one exception, which was a bullish pre-runner on Wayfair. And I thought for sure that one would work because I buy stuff on Wayfair. Everybody's at home buying stuff, and it didn't. When you violate your risk parameter and you lose, that trade is really hard to make up. That one violation cost me 0.33 in profit factor. I still ended up profitable, as you saw, but the trick is to decide how much you're willing to risk per trade. And if you cannot get a trade to fit in that risk level, pass. Just pass on it. There were over 300 trades recommended. You don't want to fall in love with one particular trade. There'll be lots of trades. The other thing is this quarter, I plan to cascade some of the trades. For example, there's sometimes a vol rise trade, which occurs like up to 20 days before earnings. And then there's a bullish runner trade recommended after earnings. Knowing that, I may choose the vol rise length, the days to expiration, longer than I would normally choose, so that I don't have to close it and just reopen a bullish runner. So these trades can be cascade into each other, and if you plan ahead, it can reduce the number of trades you make and make it a little bit more efficient. I plan to do that this time, and you'll see that as Josh and Sean go through the presentation. The other thing I learned is not to impose my own industry biases or market bias. The election didn't cause more trades to fail. I didn't like airline stocks, but I watched the Delta Airlines bullish pre-runner work. Avis worked. So rather than impose my own market bias onto it, on top of the statistics, I just plan to trade the plan and not worry about my own biases. They seem to just work out. I did not trade the non-movers exactly as prescribed. The non-mover trade, as you'll see, is a short strangle or short straddle. That's a little bit, ties up too much buying power, in my opinion. And so I always use the iron butterfly in that situation. That's the one change I made to the trading plan. And I think this time Sean has run that non-mover screen with both the short strangle and iron butterfly, because a short strangle or straddle, for those who know, it just takes a lot of buying power, ties up a lot of buying power in your account. Next slide, please. There has to be, in order to trade this, you have to have an organized method to keep track of your exit dates. One of the things that makes the plan work is you are recommended to exit on a certain day, either before earnings, after earnings, or 10 days after earnings, or 20 days, whatever, and it varies by trade. So you have to have a good calendar system so you get out on those specific days, because getting out on those days, if you have a small profit or a small loss, is important, not to ride that trade into larger losses, right? Just take the small profit or take the small loss and get out, and that makes your results better overall. As I mentioned, trades must be closed on recommended exit dates to limit those losses and take minor profits. The other thing, my favorite trade is the iron butterfly, or the earnings fly, as we call it on the weekly call. And it's a very short-term trade, is at a great reward to risk ratio, but you have to be aware of the ex-dividend date, because you could get assigned a stock on an ex-dividend date. So you have to watch out for that. And there is a temptation, even though it's a very short 1 or 2 day trade, if it's profitable, there's a temptation to ride that trade closer to expiration to get more profit. And in that trade, there's always going to be one short option that's in the money. So you never want to ride that trade into the Friday of expiration, because you could wake up on Friday and you're assigned the stock if the short put is in the money, or you're assigned short the stock if the short call is in the money. And I got assigned a stock. I got assigned long stock once on Friday morning, as soon as the market opened. So you got to, if you ride it, close it on Thursday, and that way you don't have to worry about assignment. Anyway, overall, this is what I learned. The plan was very successful for me. Your results may vary, but I plan to take these lessons and trade the Q4 plan just as extensively. And with that, I'll take any questions or turn it back to Josh.
Yeah, we'll see if anyone has questions. There's a in the meeting control, there's where you can type in the chat there. And Sean, can you monitor those for me?
Yeah, no, we'll do. I'll be watching those. So if anybody has any questions, put them in there and I'll try to respond. And if I can't right away, we'll make sure we try to get something out at the end. And yeah, I just wanted to thank Sudhir for his input. That's some really good, useful information on some of those key takeaways that he had. I wrote a bunch of notes down, so I want to make sure and talk about them or expand on them if I can. But I felt those were some really great takeaways from using the plan last time.
Yeah, thank you, Sudhir. That was very informative. We appreciate it. Definitely good feedback. And we just let everyone know, especially those people that come to our weekly meeting, we definitely value feedback, and I think most people can attest we incorporate that pretty rapidly into the platform, to make it better and better. So, thank you very much.